Let's start it, brothers. Okay. So the people who I know and people I work with are most of the first time home buyers. And it's very, very hard to when you are working with the first time home buyers. It's very interesting when you are working with the first time home buyer and helping them from moving from their first property to second property and the next property as well. So we're gonna talk about most of them as a first time buyer, what they are looking into, and what are the hurdles they have when they are actually started this process in real estate. So my name is Mihir Pandya. Everybody who knows, I've been in the real estate more than 5 years right now, and with working with the brokerage who's in business for more than 3 decades right now. And I'm here with one of the finest mortgage agent in GTA, Chris De Souza.
Thank you.
So can you tell me, Chris, about it? I know you have been in the business for more than 18 years. We have many first-time home buyers, not first-time home buyers. You also help them to buy second, third, and fourth property, making their real estate portfolio bigger and bigger. So how do you feel about it?
I love it. I'm very big on what the client's journey looks like
Uh-huh.
and what is the process that they have to go through. Right? When somebody has like a roadmap, if you punch in an address into a GPS in your car, it's going to tell you the destination and it's going to tell you how long it's going to take you to get to that destination. So I always say, like, for first-time home buyers, the first home is not the home that you live in forever, but it's the home that you hold on to forever.
That's right. That's
Okay.
right. As for the records, there are 70% people in GTA right now are the investor. But how they become investor? They bought first property 5 or 6 years ago and they hold into it. They did not sell it, they keep it. Now that's how they leverage the timing, real estate, and making their financial journey. This is a very important part. Now, moving to the first-time home buyer, what could be the benefit that first-time home buyer had in Ontario? We know that the down payment 5 to 10%.
Yeah, so ideally, to go back to your point with somebody that's looking to grow their portfolio. I mentioned that your first home is not the home that you live in forever, but it's a home that you hold on to forever. The reason why I say that to all of you in the audience today is that your first home, we always take that over ownership because it's our first home. So we want to renovate the floors, we want to fix the basement, we want to do the kitchen, all of those things. Okay, but if you can hold off for the first 3 to 5 years in doing any of those types of renovations, your property value will continue to appreciate in value as the interest rates come down. And when your mortgage is up for renewal, that's when we help the first-time home buyers strategize. How do they upsize? So if you're going from a condo to a townhouse, from a townhouse to a semi-detached, and so forth, you want to be able to make sure that you can grow that portfolio. And how long is that going to take you to do that? So if your property value is appreciated approximately 5% a year on average, right? It's 5%. So you know that in the 3 to 5 years, we know how much equity is going to be in the home, and we also know what the principal pay down is. Everything in between the value and the balance of the mortgage is what we call profit, which is equity. Okay. So now when you have that equity in your home, you can borrow up to 80% of the value in that property.
Yeah.
Which will allow you to extract essentially the money that you put into your home, depending on how much it's gone up in value. What we do is we show you how to, through a roadmap, we show you how to use the equity in that home to go and purchase a bigger property and hold on to this property as a rental property. So automatically, to your point, they've automatically become an investor. Sometimes, depending on the amount of people in the family, if it's a bigger family and they need a bigger home, then we can reverse engineer that. Meaning that we can say, okay, let's take one step back. We may not be able to hold on to this property as a rental. We could sell the property, take out all the equity from that home, use it towards the down payment, towards the purchase of the new property. Now, you're gonna have an influx of funds that you're gonna have more than 20% down. So the difference, so let's say you're putting 40% down, because you made an appreciation on your home. 20% of it we can use towards the down payment. The other 20% we can borrow that money back in the form of a line of credit.
Okay,
So in the future, as rates come down and property values continue to go up, if you can qualify to purchase another property, you can factor in that line of credit and use it towards the down payment of the new property.
No.
Okay, so that's really the overall concept of how we try and help to try and build from day one as a first-time home buyer.
right,
But let's get everybody into what does a first-time home buyer require? Let's get them into their first home. Once they're into the first home, when they sit down with myself and my team, we're gonna design that roadmap for them anyways, to tell them that these are all the things you can do within the next 3 years, 5 years, 7 years, and 10 years.
oh, yeah,
If they're in the position and they like it, they'll follow the lead. If not, and they wanna upsize and they wanna sell and do the reverse engineer, they can do that as well too.
yeah,
Okay, but typically with a first-time home buyer, and especially in Canada, it's a little bit challenging because the interest rates are so high.
yeah,
But as we were talking earlier, the interest rates are on its way down.
yeah,
Okay, what goes up must come down.
yeah,
Okay, and in my experience over the last 18 years, I've seen in 2007 and 8, and also in 14, 15, where interest rates have jumped.
yeah,
Okay, today's market, the interest rates are at about 4.75%. Okay, but to qualify, you also have to add an additional 2% on top, which makes it a little bit more challenging.
Yeah.
So the down payment portion is one of the key areas that we really want to try and focus on, and the income component.
yeah, okay,
Down payment, let's start with the down payment. Down payment, you can use up to the 21st, for any of the first-time home buyers that don't know about what the first-time home buyers program entails. You can borrow up to the first 500,000, you can borrow up to $25,000
$25,000.
in terms of your down payment. Anything above and beyond, you gotta put 10% down in the difference.
Difference,
So for example, if it's 600,000, your down payment is 35,000. If it's 700,000, your down payment is 45,000. Okay, but now you're also on a 25-year amortization because you're less than 20% down.
yeah,
The only way, guys, that you could get a 30-year amortization to stretch out your payments and to increase your borrowing power is by putting down the 20%.
20%.
Okay. Yeah.
On that note, from August 1st this year, first-time home buyers who buying the property new build can also go for amortization of 30% and 20%,
Yes, they can qualify at 30-year M
30 year
for a pre-construction.
pre-construction properties, right?
Yeah.
It's starting from 1st of August tomorrow.
Exactly.
Exactly. So, what are the other benefits for the first-time home buyers having Ontario other than 5 to 10% down, right? Another is Ontario land transfer tax rebate is one of the another concept there is for you to save more money on your first purchase, right? Ontario government, federal government give you $4,000 rebate on your land transfer tax. If you are in Toronto, the municipality also give you another 4,000, but they have another land transfer tax on it from the municipality. Now, first-time home buyer purchase also get the very benefit from the RRSP and FHSA, right?
Yeah. So currently, you can borrow up to $35,000 of your RSP towards your down payment.
Down.
Okay, but now that $35,000 is you use it once the first time because it's tax-free.
Yeah,
Okay, but on top of that, like I said, depending on how much income you're earning, is gonna be dependent on how much of a down payment you're gonna need,
yeah,
right? So that's where the challenge comes in, because now we have to play with the numbers. So as much as the first-time home buyers program allows you to borrow up to $35,000 of your RSP, you get your up to $4,000 of your land transfer tax, right? The $35,000, you may have to top it up. The sweet spot in today's market is 10%.
okay,
Okay, so if you're buying something for 700,000, you're in around the $70,000 mark.
okay,
What I'm seeing a lot of in today's market is that a lot of first-time home buyers are coming together,
Mhm.
and they're doing what we call a joint venture.
Joint venture. What is the joint venture you mean?
The joint venture is when two people, you and I, we're first-time home buyers.
Okay.
I'm renting, you're renting.
Mhm.
There's two different scenarios that I'll share. One is we'll collectively come together.
Mhm.
You make $80,000, I make $80,000. We've got $35,000 each in our RSPs.
Okay.
We're already at $70,000. So
Mhm.
we're combining our incomes, we're combining our down payments,
Mhm.
which is gonna allow us to get into that $700,000 property.
Okay.
Okay? Once now that property, now, two things happen. One, we can live in the property together,
Mhm.
or we continue to rent where we're living
Okay,
and we rent out our property.
our property,
Okay.
yeah,
But by doing it as a rental, we do have to put down the 20%.
20%. yeah,
Okay, so there's a little bit of a tweak depending on how we underwrite the file and how we prepare.
yeah. So they become investor automatically in real estate, right?
I can become a real estate investor. A lot of people say, we're gonna lose out on the first time home buyers plan if we buy it as a rental property right away.
Mhm.
But I can tell you 7 out of 10 millennials today,
Uh-huh,
they don't care.
yeah,
They don't care about the $4,000.
yeah.
Even the $35,000.
Actually, they will make 40,000 or 4,000. Actually, they wait for it.
Exactly. So it's all a matter of where you are in life and how fast you want to fast track your growth in the real estate market.
Okay.
But once you get into the first property, getting into the first property is the key.
Mhm.
Because now we have leverage where we can start borrowing against property, we can use the equity to purchase multiple homes.
Mhm.
Now, again, if you want to sell that property and we share the equity and we go our own way,
Mhm.
you get married, I get married, we can continue on with our lives.
Yeah,
Right, but if for some odd reason that we just now hold on to that property, I always like to educate on buying and holding,
buying and
right?
right?
Buy, hold, and then refinance,
Refinance,
right? So that way you're always continuing to keep that cycle going,
yes.
right? And then it'll allow you to grow your portfolio to buy multiple properties.
That is one of the good point that we not out. There are RRR system in Ontario. It's called rehab, remodel, refinance, and then resale. This is one of the best criteria we can do. It may not be fit for the first time home buyer, but many of the first time home buyer I have seen and I have worked with, what they try to do here is just an example, but it is very good example. You have to understand that fix and flip, right?
Yeah.
You buy a property with less than market value. Let's consider the property is not that good compared to the market neighborhood, right? Now you have a chance to renovate and make it according to your taste. And you can buy this property, this kind of properties, very below market values. And there are lots of wholesalers who are actually doing this
Yeah,
and helping the first time home buyer as well in that.
yeah, so what happens is you buy the property,
Mhm.
you renovate the property,
Mhm.
you refinance the property, and then you rent it out,
Rent it out,
right?
yeah,
Or you continue to live in it.
yes.
Okay, but that whole strategy is also, there's other programs like in place for first time home buyers where you can also add what's called a purchase plus improvements.
Uh-huh,
So in the event that you buying below market value, you have a $600,000 property, you spend $50,000 to $60,000 in renovations.
Mhm.
That month, that property now is appreciating in value, but what happens is the insurer, CMHC, the Canada Guarantee, they will allow you to insure that property
uh-huh.
to use this money towards the renovations.
That is a very good point.
So very simple process. You get a scope, you get an outline of the scope of work that needs to be done on the
Mhm.
property. Through a contractor.
Uh-huh,
When we submit the file for approval, we're including that whole contract of what work that needs to be done. To
Mhm.
say that, look, if once all these things are done, it'll increase my value by the $60,000
Okay.
plus. Okay, so that automatically builds up the appreciation in your property right off the hop, increases the value. A lot of times people will buy it, renovate, and then they'll flip.
that's
Right.
really good. And top of it, they will have the property according to their taste, right? It's a very good point if you wanted to think about it. So stay up to the last moment of this FAQ. We're gonna give you a little bit more incentives in it. According to our data, we have curated some of the good properties that you can even buy without any real estate agents. So if you wanted those kind of properties, stay at the end of the seminar and we'll show you how you can do it. So coming back to the point of first-time home buyers, if let's consider I'm a first-time home buyer. I don't know how to get the financing. I don't know if I go to the bank or a broker, what is the difference between them? I don't even know what kind of document you have to use it. So would you be able to explain more about how they can do that things?
Yeah, so I think you're asking the difference between a broker and the bank.
Yes.
So we have access to all, as brokers, most brokers will have access to all of the banks.
Yeah.
So what works in today's market, it's not where we get the best rate, it's where can we qualify. Qualifying is the most important thing.
Definitely.
The interest rate's gonna change. So we always say we're dating the rate, right? We're dating the interest rate because it's gonna fluctuate, it's gonna change.
Definitely.
Now, there's two types of interest rates, right? There's the fixed and the variable, which we'll touch on. But coming to a mortgage broker is gonna allow the clients to really, the broker is there to walk them through that journey.
Definitely.
Okay, if it's just a transaction and you work with your bank, it's your one property, you just want to know how much you can qualify for, they're great. They're definitely there to support you and do all of that. But if you want to know a little bit more in depth of, how you can grow your portfolio and all the things that you need to do along the way to make sure that you're successful and being able to purchase this property, that's where you get that additional service. The banks close at 5 o'clock.
Yeah, definitely.
We're not closing at 5 o'clock. We're always on.
24/7.
Yeah, we're always on. So it's a matter of being able to advise the clients along the way and hold their hand to say, these are the requirements we need, here's the reasons why, and let's help them get to that point where they are actually in the position for you to go and put in an offer on the property. When they come into our wheelhouse, within my team, we will design their whole portfolio and get them to the point where they're confident, where they know that they are gonna buy for $750,000. They have all the requirements that's needed. We underwrite the file prior to, similar to like when you go to a bank, you get a pre-approval. We're doing a pre-qualification versus very similar, but I already know which bank we're going to, who's gonna approve the deal, what type of interest rates are we getting, and then we shop it. And even prior to closing, like if the rates drop for whatever reason, then you'll get the lowest discounted rate prior to closing.
Okay, and we have that, if in case the market does not pretend as we expected and they do something to increase the interest rate next year, probably, I'm hoping not they do it, but if they do it, is there a possibility you can lock down the interest rate you prefer to have it for the first time home buyer?
Yeah, depending if you're going on if you're starting off and if you can qualify on a variable rate, then I would always encourage, in today's market now, currently, to take advantage of the variable rate. And the reason being is because the difference between a fixed rate and a variable rate is about 50 to 60 basis points, depending on the lender. Now, the thought process around it as a first-time home buyer, there's a mindset behind it, right? So are you in the position to take that chance, knowing that, okay, the rate is 50 basis points higher, which means that in the next 3 years, do you think that that interest rate, the variable rate, is going to drop at least 2 times to match the fixed rate if you were to get the fixed rate today?
Yeah.
9 out of 10 times the answer is yes, right? And depending on your risk tolerance, some people just like to know my payments are fixed. This is what I need to pay for the next 3 years, and they're content.
Okay.
Others understand the value behind it and say, well, we'll take advantage of the variable rate if they can qualify because it is higher, right?
Yeah,
50 basis
definitely.
points higher. So if the rate is 50 basis points higher, it's going to decrease your borrowing power slightly.
Yes.
So you may not buy the 750 property you purchase price, you may buy something for 700.
Okay. So this is a very good point. You have to note it down. What is fixed and what is variable, and how is better, which one is better for you? So depending on your criteria, your monthly expenses that you wanted to do it, or it might be a very good to be a fixed or a variable.
Yeah.
But compared to the market, what would you suggest to a first-time home buyer? Should they go fixed or a variable?
Yeah, like I said, if they can qualify on a variable, I'll give them both options.
Mhm.
And then I'll just dissect it a little further and say, well, here's your monthly payment on a variable, here's your monthly payment on a fixed.
Okay,
But it's not about, it's more about what the advantages is around those two
Okay.
products, right?
yeah,
So on a fixed rate, you're locked in for the 3 years.
okay. So make a note here. Chris will advise you when you're working with the broker, specifically like Chris, who's in the business for more than 18 years. He will advise you which is better for you. So they will give you monthly plan to work around. You can make a mind and have a piece around, right?
Yeah,
So you need to make sure to go to the right person.
I love that. It's well said. Going back to the fixed and variable, the fixed rate, you're locked in for the 3 years, right? So in the event that the rates drop, you're gonna have to break your mortgage in order to get the lower rate and pay the penalty.
Yeah,
Now, the penalty on a fixed rate is based on whatever months is remaining
Remaining.
on the balance of the mortgage is
Yeah.
what their penalty is gonna equate to. So the strategy around it is to say, well, if you can qualify for a variable rate, the variable rate is gonna fluctuate. Yes, we know that.
Mhm.
But two things happen. One is we are hoping, we don't have a crystal ball, but we know that the rates are gonna come down.
Mhm.
Your monthly payment will come down.
Okay,
Now, in the event that the fixed rates come down while you're on a variable rate, you can now lock into the fixed rate.
fixed rate,
Okay.
yes,
Now, if you were to break your mortgage on a variable rate, meaning break your mortgage means not that you're gonna convert it from a variable to a fixed.
Fixed.
That's not considered breaking the mortgage.
okay,
But if you're gonna lock in the rate, you
Mhm.
can. Or if you're gonna break your mortgage, let's say you want to refinance the property because the value went up. What value went up? Or you want to sell the property because you built the equity and you want to upsize.
upside,
Your penalty on a 3 month, on a variable rate is 3 months interest,
yeah,
whether it be in year 1 or whether it be in year 3. So you guys, I have to also understand the client and what their risk tolerance looks like before as much as I give them the monthly payments, that's
Mhm.
fine. But I want to know what the risk tolerance is, like what does their stomach tell them to do?
definitely, definitely. Coming on this one, we have very good example of what happened in the previous client who were bought the property in September 2023. They went to the, this is a very good example that you need to make sure does not happen if you're working with the right person. So they bought the property in area that they think would be a good for their case because there are good schools in that area. But after coming to that particular property, what happened? They did not like the area because they thought they will fit in with the old properties around it. But they wanted to be in a very good, like a new build property. Now, what happened? The school were good, everything was good. The area, they liked it, but the property was old. So they wanted to move because they had a variable rate at the time. They can quickly sell that property in 9 months and move it to the bigger property. Now, what happened in that?
Yeah.
They got equity in that property because they bought it at very reasonable price.
Well, in today's market, it's a great time to buy.
Yeah.
Okay, the reason why it's a great time to buy is because the interest rates are still slightly higher and the values are lower.
Mhm.
Now, if you are in the position to take advantage of the first time home buyers plan and you can qualify to purchase a property, even if it's 500, 600,000, like I said, get into the market.
Mhm.
Because as the property continues to appreciate in value, you know, as interest rates come down, you're gonna make a higher profit margin on the
Definitely.
equity, right? But people will tell me all the time, no, we're gonna wait till the rates drop. Okay? So when I do the math around it, when you look at when the rates drop, similar to what happened in 2021.
Yeah.
Okay, 2020, 2021. The interest rates were, call it 2%,
Uh-huh.
but the property was 900,000.
900,000, yeah.
Right? Here, you're buying that same 900,000 for $150,000 less, and the
Yeah.
interest rate is slightly higher. But when you do the math on the monthly payment, it's not off by much, maybe $100.
Yeah,
Right? But people always have the mindset and the thought process of, I'm gonna wait till the property, the value, the interest rate goes down.
Mhm.
Now, why wait till the interest rates come down when you are gonna buy at a higher purchase price?
tricky part on that. If you are the first time home buyer and you are looking for a detached property and have in mind, I just want a detached property, I do not want to go to condo, what will happen to you guys? that if the property prices are for the detached in a couple of the areas like Brampton, Durham regions, right? Where the property prices for the detached is 950. And the market pickups because of the lower interest rate, they will go over $1 million. What happens if they go over $1 million? They have to put 20% down, not 10% or less.
Great point. 100%. So anything under up to $1 million, you can put less than 20% down.
20%
If you're buying anything over $1 million, it's mandatory to put 20%.
20% down.
Yeah.
So this is a very good point you have to make and understand that how and what kind of property actually you are preferring to have. So depending on it, if you are on an age of $1 million, there might be a chance you might have to put 20% down, which is not good for many first-time home buyers. Moving to that, what kind of documents I should, as a first-time home buyer, provide to a lender to qualify me?
Sure. Yeah. We base it off of three things.
Okay.
It's your income,
Mhm.
your credit,
Okay.
and your down payment.
Okay.
Okay. Now, when you're putting less than 20% down,
Mhm.
you now also have to ensure that you've got 1.5% on top of your down payment money for your closing costs.
Okay.
Your closing costs will encompass of your land transfer tax, the registration of the mortgage, your title insurance, your legal fees. Being an insured, less than 20% down, there is no appraisal because the insurer does
Yeah.
that on the back end.
Yeah.
But if you're putting down 20%, that's still buffered in as well.
Mhm.
But if you're putting over 20%, if you're putting more than 20%
20%.
down, then you still need to show a 90-day history of where the money is coming from.
Okay.
Do you have it in your account for the 90 days?
Okay.
Once you have it there, then we can use that money for the
Okay.
down payment. Then you're gonna need the income. There's different types of income.
Okay.
You've got
Salary,
salary, you got hourly,
Contract.
and hourly contract, and then you've got some business for some
Business.
people who are in business.
Self-employed.
Self-employed. But with salaried employees,
Mhm.
it's just job letter pay stuff.
Okay.
For an hourly employee, because they can work overtime or they can work less time for that matter. The lender is not only asking for the job letter, but they're also asking for the 2 years of the T4s to say that if they've made more than their hourly rate for the 40 hours that they work,
Mhm.
then we can use an average of those 2 years of the T4s as long as the current year is higher than the previous year.
Okay.
Okay, so that also helps somebody that's on an hourly wage.
So this is a very good point. If you are on hourly wages and you are having overtime, you need to make sure how you can have maximum benefits from your T4, right?
Yeah, and when we go through the pre-qualification process,
Mhm.
we explain that to the client and say, look, here's how much money you're earning,
Mhm.
here's what you can qualify for.
Wow.
In the event that you have another joint venture partner or mom and dad or brother, sister that can come in as a co-signer or guarantor, which we'll talk about,
Mhm.
then if they're making $50,000, we know that, okay, that's gonna bump up their purchase price.
Okay.
Okay, in terms of how much you can qualify for.
That's a very good point, right? Another thing, I wanted to ask you this. If I am a self-employed, but I also have a salaried job, right? So many of the people try to do 2 jobs to get more income in pocket, right? So let's consider one person is doing 40 hours of job, like a salary job, right? And then he's also doing a marketing business or sales business in the side. How does that combined income working?
As long as they've been in the part-time business for 2 years,
Okay,
we can, same applies for the hourly employee. We can show the 2 years of the T4s
Mhm.
to say, they've been in business for 2 years, so that's the
Okay.
one requirement. Plus, we know that they're making an average of those 2 years.
okay,
Okay, so let's say it's another $40,000, we can add that on top of their $80,000 income. So it'll help them increase their borrowing power because they have more money now in terms of income.
okay,
Right, the down payment is also the 35,000, but that still has to be there within the 90 days. But if you have an additional savings on top of it,
Mhm.
then we can play with the percentages. It doesn't specifically have to be 5% on 500K and 10% on the difference. We can play with the number and say, okay, maybe you're at 8%, maybe you're at 9%. We can do it by percentages as well,
okay,
right? But the most important thing for people who are hourly and salaried is to see what is it that they can qualify for based on their income today.
Okay,
Then we say, well, okay, how much income would you need on top of your income to qualify to purchase that bigger home that you're looking for?
Cool.
Right, so that way they have another plan to work.
okay. Coming to the down payment, as you say, right? If let's consider most of the first time home buyer are the immigrants or people who is actually getting money from their parents as well. How does that money qualify? Like if I have that money coming from my parents from outside of Canada, is it still considered under the down payment?
Yeah, so let me just pause there. Depending on where the money is coming from and depending on the country that it's coming from,
Okay,
then yes, if they're able to move the money into Canada,
Mhm.
then we need to be able to see where the money came from,
okay,
where the money has been transferred
okay,
to ensure that it's their own money.
okay,
Then the money that they have can be shown as a gift from mom and dad,
okay,
okay? And then that money is added to the $35,000.
okay. So quick tip, let me ask you, I know I should not be saying this while we are recording, but I'm gonna, because I want my clients, my friends to have
Okay,
maximum benefit.
okay, good.
Let's consider I'm getting that money in 90 days or more.
Yeah, I know where you're going with it. If it's either way, I'm gonna say if it's in 90 days,
Okay.
either way, it's in your bank account,
Mhm.
but it's still coming from an outside source.
Okay,
Right, so we'll still show it as coming from mom and dad,
okay,
and then they'll use the money for the down payment the same way.
okay. So that's a very good point. We have to make sure where we get it, how we get it. Keep it every record clean
Correct.
before you go for a mortgage. Coming to the mortgage, is pre-approval is mandatory?
No,
No,
No.
no.
no,
Okay.
what we suggest to do, and if you're coming through my team,
Mhm.
we want to be able to have a 30-minute call with you. So
Okay.
you would send an introduction like you normally do.
Mhm.
Chris, meet John, John, meet Chris.
Mhm.
Chris, John's looking to buy for his home for the first time. Can you please reach out to him to set up a call?
Definitely.
We will send out a link to my calendar where they can set up a call. And then I'll take an intake call for 30 minutes. There's no cost to the call.
Okay.
And then I'll be able to fact find and figure out exactly where they are today
Mhm.
and how we can help,
Okay.
if we can help. Now, when we can help, we'll walk them on to the next step and say, okay, we're gonna send you another email with a link to our URL
Mhm.
that takes you directly to the application page.
Mhm.
From that application page, as soon as we receive that application,
Mhm.
we'll now within 24 hours, we'll underwrite that file, we'll figure out exactly what all the things that you can do and how. Another email goes out with the link to the calendar again to say, okay, your file is ready for review, get back on the call with me, and then I'll tell them all the things that they can do and how.
Okay.
Okay, so we simplified the process, so that way, one, I know if I can help. I don't want people to just call and say, we're here, this is what we want to do,
Mhm.
and then we can't help, but we'll prepare them is my point.
Okay, definitely,
Yeah.
definitely. On the preparation, let me ask you, is credit score above 700 is better or has to be 750 plus?
No, so the credit, so just within this process, we don't pull credit.
Yeah, definitely.
Okay,
definitely.
the one thing that my expectation is of the buyer is that they know, they can tell me, Chris, I have a car payment of $400, I have a student loan of $60 a month, and, we have a credit card at 10,000. Okay, so they need to know. If they don't know their own debts and how much they pay on a monthly basis, then we need to make sure they're.
Can you give us viewers a little bit tips how they can improve their credit score?
Yeah, absolutely. So just to answer your question earlier, the
Mhm.
minimum credit score requirement is 680.
Okay,
Okay, there are lenders that will have, every lender has its own appetite, okay, guys? So some lenders will go, will use 640, but I would say to be safe, keep it at 680.
okay,
Okay, now to help you improve your credit score, to your question, the Equifax has now recently changed the way they calculate our scores.
okay,
So for example, if you have a credit card of $10,000
Okay.
limit,
Mhm.
okay? and you're always using 8,000, 9,000 of it on a monthly basis, and you're still making your monthly payments,
Okay.
right? Your minimum monthly payments.
Okay.
You, as the customer, think you're doing the right thing, because you're making your payments on time. But what Equifax on the back end happens is they look at it and say, well, if you're at a $10,000 limit, and you're always having a balance in between $8,000 to $10,000, that negatively affects your credit score. Okay, so the rule of thumb is if you have a $10,000 credit card, you only use it like as if it's $7,000.
Okay, that's a very good point. Please make sure you do not use a full credit, okay? Never.
Yeah, but with the credit cards now, it's the same thing applies with the lines of credit.
Oh,
Okay, but the credit facility itself, the bank wants to make sure that you have two pieces of credit for a minimum of 2 years, so they know that you made your payments on time.
oh, okay.
Once they know that you've made their payments on time on the $10,000 line, or $10,000 credit card, they're gonna be open to extending you money to purchase a property at $500,000.
That's good. That's very good. So listen up, guys. You have to make sure everything is aligned before you go for a mortgage, including your credit score, your bank statement, your down payment. All the necessary things needs to be aligned when you are going for financing. It is very important than anything else, right?
100%. Credit is always, you always want to make sure your credit score is at the 680 plus.
Wonderful.
Once you know that, and you know that you're making your payments on time, you're keeping your balances under at 70%, you'd be fine.
Okay, please make a note about this, right? Now, moving from the mortgage to the home buying process, how is this gonna work? If I have to buy a property, let's start with the closing costs. How many closing costs they have it, right? I know they have lawyers fees.
Yeah.
Okay, they have land transfer tax. Then you have the inspection if it's necessary, or appraisal fee, right? If it's not insured. What are other they have to go for a closing cost?
The registration of the mortgage,
The registration of mortgage,
title insurance.
title insurance. Why title insurance is necessary? Can you explain that? Because I know first time home buyer doesn't know what title insurance is actually.
To simplify it, is protecting the property based on the lien that's attached to the
Mm.
property, right? And short form.
Definitely. We have seen a couple of the example in the past that somebody sold the property without even knowledge of the seller. So in that particular case, the title insurance will kick in and help you to protect every inch of your money. Okay, so that's why title insurance is mandatory. Again, property insurance is also mandatory because when you go for a mortgage, before mortgage kick-ins, they will ask if you have insurance on property or not.
On the home, that's property insurance. Yes.
That's property insurance, right?
Yeah.
It's very important that you need to understand this. Most of the couple of the small things when you going for closing, right? Coming back to this property, let's dive into what and how they can go for property pricing and everything. So let's coming back to here, right? If I am a first-time home buyer, I'm buying a property in Brampton area. It's a semi-detached or probably townhouse for myself at 750 to 700. How does it work according to the mortgage rate, down payment, closing costs? Let's dive into those ones.
Let's do it.
Okay.
Yeah.
So,
and guys, if there's any questions in the chat, please ask them in the chat. We'll be happy to answer them for you. Okay, along the way. So please, any questions based on the content that we're sharing with you currently, please feel free to chime in. We'll be happy to answer the questions for you.
okay. So let's again, please focus on this complete spreadsheet that we have actually created for you. If you are a first-time home buyer, not having condominium, but specifically going for townhouse, what kind of scenario happens if you qualify, right? Let's dive in. The property price is 700 in a Brampton. It's a 2-story, 3-bedroom finished basement, right? And my client likes it. Let's consider if you are a first-time home buyer, what other costs will go and how it will go about, right?
Yeah.
Okay, go ahead.
So we have a $700,000 purchase price. We have it here at 70,000 as the down payment. So we're using 10% as the example.
Okay,
It is on a 25-year amortization. Just for everyone in the room, 25-year amortization is when you're putting less than 20% down. It also increases your monthly payments slightly, but you are paying more towards principal and less towards interest.
Okay.
When you put 20% down, it stretches out your monthly payment, reduces the payment, but you're paying a little bit more towards interest and less towards principal at that point. But it increases your borrowing power,
Definitely.
right? So that's the goal, is to get you into the borrowing power,
Okay.
and increase that.
In this note, can you just one quick tip? What would be their salary to own a 700,000 at 10% if you have to have the first time home buyer?
Yeah, okay, so let's say it's $700,000.
Okay.
Is the price. You're looking for a loan, let's use just for ease of understanding, let's use $1 million.
Okay.
Okay, so you're buying $1 million home,
Mhm.
you're putting 20% down, we use 20%, that's $800,000.
Okay.
Now, in order to give yourself a rough idea, and there's also a mortgage app that we can send to all of your, to everyone that's here, that they can actually calculate for themselves as
Okay.
well. But the general rule of thumb is that if you need a loan amount for $800,000,
Mhm.
you divide that by 5.
Fine.
Okay, so it'll be approximately $160,000 in income that they're gonna
Okay.
need for that $800,000 loan.
Okay.
Okay, but now we also haven't factored in credit, debt,
Definitely.
any car payments, things like that.
Yeah.
But that's just a general rule to give you an idea.
Okay.
Okay, but there is a mortgage app that I was mentioning to you earlier that we can share with everyone. And they can just go on and punch in the numbers. It gives you all the scenarios. It could be 25-year amortization, 30-year.
Okay.
And then they can kind of get an idea of where they're at.
That's very good because I wanted to share some insight that he helped one of my client and I really like how he helped. He was actually looking to buy condo townhouses under 650. But when we calculated his salary with wife, right, including his wife's spouse income, they become around 150 to 140, I believe so. And they can qualify with 10% down only. And this is how a mortgage broker like Chris can help you with just 10% down with income of 150,000. Yeah, again, there are multiple factors included in it. Like he said, credit score, your car payments, and any other debt, they have it, right? Again, but you need to make sure when you're working with the right broker like Chris, you are at least qualified with the 10% on your freehold properties. This is a very good, you can have it right now. I understand you did a very good job.
No problem. That's no problem. That's what we do.
Definitely. Okay, so moving from that, when you are going for 10%, you need to have fixed rate because not fixed rate, sorry. 25 years of amortization. You cannot go for 30 years of amortization period in that. With the fixed rate, why 4.79? Is it the 4.79 for the insured rate right now?
Insured rate, yes. Anything less than 20% down, you're also paying an insurance premium to
Okay.
be insured.
Okay.
So you get a slightly better rate
Okay.
with it being less than 20% down.
So in compared to 20% to 10%, I'm getting better rate as well.
You are, but you're also not being able to qualify as easily.
That's
and your
true.
monthly payment is also higher.
That's
Right,
true.
so the better option is to try and get it to the 20%.
Okay.
So it increases the borrowing power.
Definitely.
Right,
Definitely.
and the payment stays well lower.
That's right.
Yeah.
And that point,
But yeah,
if you are joining with somebody who's your friend, family member, you might be able to do it if you are qualified for 10% and the other person is to have a 10%. You can do 20% right away.
yeah. Look, a lot of people, what they'll do when they put 20% down, they'll take advantage of the 30-year amortization because it helps them qualify at that point, right? But you can still make payments like as if you're on a 25-year. So now you have the best of both worlds.
Definitely.
You got the 30-year amortization to qualify, you get into the property, you make your payments like as if you're on a 25-year.
Okay.
If for whatever reason your wife loses her job or she goes on mat leave and you want to push it back to the 30 years, you can always change it. But if you're on a 25-year, you cannot go back and forth.
Definitely.
Okay?
That's really good point. Now, coming back to the spreadsheet, with the 10% down payment of on 700 property, 70,000, with the mortgage amount 630 at 4.79 for 25 years of amortization, your monthly payment is 3606. You know that if you actually rent out this similar townhouse, your rental amount is 3,000 to 3,200. You just pay 400 more on the
Great point,
mortgage.
great point. Yep, absolutely.
Yes, you will have also another monthly expenses like property tax, insurance, and if it's necessary, utilities as well. So we have carried it a little bit according to the property pricing, the property taxes per month. $304, insurance probably around $150, and utility including hot heat, hydro and water around $250, which is coming at $704 per month. That's completely fine because what's gonna happen in the future, right? You will always get your principal recapture. You get passive appreciation on your property for 5% annually, which will give you more idea on.
Yeah, but let's just explain to the audience what the principal recapture means,
Yeah,
right? Because that's really important.
so yeah. Good point. How do you define as a principal recapture?
Your principal recapture is what adds to the principal pay down. So
Mhm.
you're recapturing those funds
Okay,
based on the money that you're putting on a monthly basis. Your passive appreciation is how much the property is going up in value.
Value.
We're using 5% in this scenario
Mhm.
to be conservative,
yeah,
depending on the city that you buy.
city, yeah.
Right?
On an average in Toronto and GT area, it's 7%.
Yeah,
Even in this market,
yeah,
even in this market, it's 7% sometimes, but depending on the properties.
correct.
Right, moving to the down payment and other land transfer tax portion, it's 4,475. That's actually including your in Ontario land transfer tax rebate. So overall, it is around 8,000, 11,000, and then you have to deduct 4,000 out of it. Your legal fees would be around from $1,000 to $2,000, depending on how you wanted to get your lawyer to work around the documents. If you need a good lawyer, their probably pricing would be around $1,199 plus tax, so probably around $1,500.
Yeah.
Now, coming to your one total ROI, how that does work for you. So you need to understand if you are buying a property at 700,000, right? You will be paying principal amount in your mortgage, which is a recapture rate. That's where we talk about it, which is 17,000. And appreciation at 5% minimum, you will have $35,000 in your pocket at the 1 year. At the 1 year. So you need to see if you are putting 70,000 like an investor, like a beginner who always wanted to keep their money in their pocket. What you see is after putting 70,000 on a down, how much I get after 1 year. That's what ROI means.
Yeah, ROI is your return on the investment for the year. And if you do the $35,000 and you do it over a 3-year term,
Mhm.
that's where I was saying earlier that you technically could, as your property appreciated in value by, the 35 times 3, right? So
Mhm.
you're at, you can now pull back out your down payment money, which originally was $70,000. So
Yeah.
technically in 2 years, you can get your money back.
Definitely. So this is how it actually works. When you buy a property, you hold on for 3 or 5 years to get appreciated, and you will have more equity in it. By the end of the 3-year or 5-year terms, you will have more money in your equity than your down payment for the next property, probably. Right? In this, you can use or refinance your mortgage and buy another property and become investor.
Correct. Correct.
And you will have that after that, right?
I'll do it all for them. I'll show them how to do it all from start to end.
Oh,
Remember, they don't go back to you until we know exactly where they're at. Do they have the risk tolerance for fixed or variable?
yes,
We know what they can qualify for. So when you go and put in the offer, you're going in that much more confidently because you know that we are in the position to get the financing.
yes,
Only downfall with somebody buying less than 20% down is a lot, and not in today's market, but overall, when the market is, when it's going into multiple offers, at that point, there's a lot of people would go in firm.
Mm,
But when you're putting less than 20% down, I don't recommend you go firm because it's also based on the type of property, it's based on the insurer's approval.
uh-huh,
The insurer has to say yes in order for the bank to say,
mhm,
right? So we gotta make sure, we don't want to kind of take that chance,
Uh-huh.
take a little bit more of a conservative approach.
Yeah,
But we're still going in confidently knowing what they can qualify for. And we can do other things like showing them a pre-approval letter. Here's what they can qualify for. And as a first-time home buyer, a seller will more than likely know that they're first time.
Mhm.
And they also understand that they were also a first-time home buyer at some point. So they're gonna want to give them at least that 24 hours, right? We
Yeah.
don't need 5-day conditional financing.
Yeah.
But at least 2 days, just so that way the first-time home buyer has peace of mind, knowing that they got the approval, they have the paperwork, everything signed off, and then you guys can go firm and sign the waivers at that point.
Definitely. And I want to apologize because we are talking too much. We didn't see the timing. It's already 1 hour in the meeting, and we have lots of things to share with you. So we're gonna jump on another slide
Okay.
and talk about how we can qualify for different kind of properties in this market. So we have started this particular average price change over the period from 1980 to 2023, how the market has completely changed. So if you can see, this is a average price change over a year. So which will give you what happened from 1980 to 2023 in Ontario or in the Canadian real estate market, which will show you. If you can see, where are the interest rate, and you know that, right? In 1980, interest rate like 18% to 20%.
Yeah.
Even the price changes were higher at the peak. You can see reason behind it. People wants to buy, not the rent.
Exactly. But I can tell you too, that from that time frame, 1980 to 1990, where you have that big spike,
Yeah,
the Bank of Canada, our economists, they've all learned from that spike that has happened. So as you can see along the way,
Mhm.
it's fluctuating up and down. Yes, real estate will always go up and
Up
down
and down.
in an upward motion, but here it's a lot, the up and downs are a lot smaller,
Yes.
right? It's not as high of a peak as today.
But did you make a note here? When you have down, it always go up.
Yeah.
Where are we here right now? We are at the down, actually down moment. And now the market's gonna pick up with the 2 back-to-back interest rate reductions.
Yeah.
It's gonna go up very quickly than people even thinking. Once they give September another interest rate reductions, their quota for the year to put a 0.75 down will be covering.
Yeah.
And the property price is gonna build up immediately. So we're gonna talk about how it worked in the last month or so. So the cap average price, if you can see it, is around almost 1.156 at this moment, which was the similar as May. As this is June data again, right? We haven't received any July data at this moment, but we are at this moment where we will receive the July data, and we will confirm that the market is actually not going down, but not stabilizing, but going up in the moment of it. So we cannot see this. If you can see, this is where the market completely got down. They started interest rate hike in this level, and the market start falling, and that becomes stable in the last summer. It become a little bit stable and then again started jumping a bit and started reducing market as well in the fall. And again, after the January, market picked up until the May. May was the slowest in the history of Canadian real estate.
Yeah, it's true.
And the June, May and June becomes very tactical, because when we have interest rate reduction in June, people thinking, I might need to buy now.
Yeah.
Before the price go up. So they started on purchasing. But the inventory was so high, we will show in the next slide that if you can see here, there are active listing in June was highest record of 14 years. Even though they have sales, due to the high inventory, market becomes stable. But you need to understand this one, right? After the data, we see this, that even though there is lots of inventory, the price point remains same as May. As you can see, the 1.106 becomes the same as 1.15 in June. So you need to understand here, even though there are so many inventory, price is not reducing, it's stabilizing. What will happen if the inventory goes down in the next 3 months and the sale started picking up? People's gonna say market is going crazy, and that will is considered as a form of fear of missing the inventory.
Right.
What are you saying about it? So is gonna stabilize for a while, or they're gonna reduce the interest rate on September and then started increasing the purchase value?
No, I think that the interest rates will start to slowly come down. They're not gonna go down as fast as they went up,
Okay,
but gradually it will come down, which is why I'm saying, well, like right now, a 3-year, whether it be a variable or a fixed rate, that's the sweet spot. Because it gives enough time for the market to kind of adjust itself. You're getting into you're getting into an adjustment of the monthly payments. And then when your mortgage is up for renewal in 3 years, in hopes that the rates have now come down even further, now you have the option at that point to continue to shop around,
okay,
right? So you're not really locked in at that point.
yes, that's a good point.
And the other component to that is that it's also, the 3 years also a good percentage to be able to qualify it. So it helps people, if like the 1 and 2 year is too high,
Yeah,
right? And a lot of people think that the rates are gonna come, economists specifically, they feel that the rates are gonna come down within the next 2 years.
okay.
So that's why I say if you're going on a 3-year term, okay, you're paying, your interest rate is less than the 2-year, right?
Okay,
So if you're paying more interest if you're paying less interest on the 3-year term
Okay.
versus the 2-year,
okay,
in the event that the rates do come down based on the economists to say that they're gonna come down in the next 2 years.
yes,
In that 3-year term, you're still paying more towards principal and less towards interest, because the
Interest.
rate is lower.
yeah,
But in the event that you want to break your mortgage in the 3rd year, depending if it's in month 3 or month 6.
Yes.
Remember that penalty is gonna be a small penalty to break the mortgage,
Break the
right, at that point. But it also is gonna slightly offset that penalty that you're paying is gonna make up for that difference that you paid down on the mortgage,
on the mortgage.
right? So it kind of balances itself out.
That's really good point. You have to make sure what kind of interest rate you are locked in, 2 years, 3 years, or 5 years, making big difference for your next property. Even if you are a first time home buyer right now, you have to see what is gonna do in the 3 years, because understand that not jumping to a bigger property actually make a big decisions and a right decisions. Let's consider you buy a condominium today, which is having a lots of inventory, and seller are actually giving and negotiating on a price from prospective. I have seen the properties sold less than what they should have,
Yeah.
right? Appraisal coming higher than what they sold for. Now, if you buy a property condominium in today's market with below market value, right? It appreciate in 3 years and giving you more room for equity, and you can buy a bigger property at the end of the 3 years. So you have to make sure either you wanted to get a big chunk and choke on it, or you wanted to take a small bite, let it sit for 3 or 5 years, and then do whatever you wanted to do for your dream home.
Sure, yeah, and what we do, like, just to tap on that piece, is what we do on our end is, once the client sits down with you and you're able to kind of get an idea of where their headspace is at, what's their risk tolerance, what type of city, what city do they want to live in, they'll do all of that with you as the realtor first.
Okay,
When you do that introduction to someone like myself, what we're doing is, we're doing over the years, I should say, we've come up with a simple process.
okay,
And then we do what's called a real estate action plan.
yes,
Okay, it's technically a roadmap. It's a mortgage roadmap that we put together to say, here's what you're doing today. Here's how you can get into the property. Here's how you get into the property. Here's the next steps that you need to take. So we're holding your hand along the way. It's really all we're doing. But when you have somebody to hold your hand, you feel more confident buying
Definitely.
or walking or whatever it is that you're doing, playing a sport. You're always going to feel more confident with somebody there with you.
and with the first time home buyer, it is very important to understand every step with the right person.
Yeah, that's why we break it down into an
Action plan.
because we dissect it step by step, so we understand all the things that are happening. I can do the deal, you can do the deal, you can put the deal together for the client, but if they don't know all the things that are happening, how are they gonna know at the end what the purpose of it was, except for the goal that they're purchasing the home?
Definitely.
Right.
So coming back to the real estate action plan, we're gonna talk about at the end of the various sessions where we can help you by even dissecting, as you said, right? Understanding what you're looking into, what you have, and what you can qualify for. That makes a big difference whether you wanted to go for a condo or a freehold, or maybe you wanted to wait a little bit more on it. So we actually created a real estate action plan. At the end of that, we give you a task or some little bit kind of homework that we have done it so far,
Yeah.
that you have to do it for yourself because it's your property, your distance, how you want it to go further. It's very important instead of thinking about of what the real estate agent says versus what you actually wanted to do in the next 3 to 6 months is very important. Coming back to the market state, I know we talked a lot and we love to talk about.
There's so much to talk, like, as a first-time home buyer, guys, this is just really a quick overview and a quick intro as to how you can get started. But
Yeah.
I can share with you that, with a first-time home buyer, it takes a minimum of 3 calls on an average of 40 minutes with the first-time home buyer
Yeah.
to get them to where they need to be, even just to put in the offer.
Definitely.
Okay, so this 1 hour session is.
It's just like a drop in the ocean.
Yeah.
So coming back to the market study, can you see overall GTA market for the overall pricing are 1.13 at this moment. If you can see the condo corners, the condominium value is 727, depending on where you are, depending what you are looking for, 2 bedroom, 3 bedrooms, and one, it's an average value. Staying 22 days in the market with 3.8 months of inventory. What is months of inventory? Let's talk about a little bit in it. So months of inventory, like consider today, there is no listing coming up in the market. Still, there are so many listings that you have 3.8 months, almost 4 months of inventory in the market without even new property coming in. So as we talk about it, in the last slide, that there are so much inventory and yet the prices are not dropping as they supposed to. The next step for the first time home buyer to understand what will happen if the inventory did not come very well over what we have right now. So if the inventory stop coming in the market, the price is most likely gonna go up, maybe 5,000, maybe 6,000, but it's not certain that it will drop. So you need to understand those markets and statistics about the city and that you are looking to buy.
Yeah, that'll also determine whether it's a buyer's market or if it's the seller's market.
Definitely.
Okay, so depending on the months of inventory.
Yes.
Will determine, that's how you can determine the number of units that have been sold, that are out in the market versus how much are sold.
Definitely. So compared to the buyer, seller, and balance market, so usually the thumb rule is 0 to 3 months. Inventory is a seller's market. Again, yes, seller's market.
Yeah.
3 to 4 or 5 months is a balance market. And if you have more than 5 months of inventory, it becomes a buyer's market. But again, you need to understand the criteria, CD, what economics you are looking for, what kind of property you're looking. That depends on it as well.
Absolutely.
Okay. Now, Toronto properties in June sold for within 23 days in the market with 4.30 months of inventory, making it's a little bit balanced market. And for the condominium, it's one of the best till you can get it in the right time. Right now, so many condo inventory we have seen so far sitting on the market, not selling it. Even we have seen one property, I probably should say this, in a Mississauga, where the seller was offering 1 years of maintenance. Inclusive for their purchase.
Yeah.
So they get at least 8, let's consider on an average, the maintenance in the Mississauga area is $700, right? On an average, they are getting $9,900, almost $10,000 of value lower than market.
Right. But to your point, what I'm seeing a lot of what's happening, especially when we're crunching the numbers for a first time home buyer, is that when you're factoring that condo fee of $700,
Okay.
right, to get into a condo, if you were to remove that $700 monthly payment, you're now kind of in the position where you can purchase a townhouse.
Townhouse,
Right,
yes.
because that $700 is being eliminated from the equation.
Yes.
So it helps people get in, which is why another reason why you're seeing a lot of condos on the market, but it's also because there's a lot of inventory
On the market, right?
freehold side.
Freehold side, but let me ask you this, if a condominium is like 600,000. Do they qualify with the just let's consider 5% on 500 and 100,000 or with the 10%?
Yeah.
That's possible,
Same,
right?
yeah, it's a
So,
price call.
just with 35,000, they can own a property
Absolutely. Absolutely, for 600,000.
for 600,000,
For
which is what, which is 2 bedroom, 2 bathroom condo in Mississauga is right now,
On average.
on an average,
Yeah.
on an average.
Yeah, yeah.
But those are the very good criteria if you wanted to buy a property. Let's consider you're a first time home buyer and you have just 35,000 in your pocket.
But don't forget the 1.5%. So they'll need about 9,000.
9,000, a little bit more
950
on the closing costs,
through the closing costs.
For the
So
closing
technically, then let's just round it up and say it's 45,000.
45,000.
Yeah.
But that's a good deal though.
Absolutely, especially if you can get into the market, like I said, when the rates are a little bit higher.
Yeah.
You know that over time, the rates are gonna come down and your property will go up, right?
Definitely property gonna go up with the market going interest rate, as the thumb of rule, interest rates go down, property values goes up. And the same thing happen, interest rate goes up, property prices are dropping down.
Yep.
That's what we actually experienced in 2022 after March.
Correct.
Then, so you need to make sure how the market is behaving with the interest rate. Coming back to the Mississauga, as I said, you can buy $626 condo in Mississauga. That's 2 bedroom or probably 3 bedroom.
Yeah.
So this is a very good timing for you guys to get into the market. In Mississauga right now, average property prices are over $1 million with 23 days on the market, which is actually dropped down 3.25% over year. So that means last year on the same property was later over 1.1 million. So you need to understand as well, as the market behaves, year over year also changes. Coming back to the Brampton area. In Brampton right now, the townhouses are ranging from 680 to 720 and the semi-detaches. The best part in semi-detached is what we happening in the Brampton, what we've seen so far is 4 bedroom semi-detached properties with the finished basement are selling at 965. And when we did the calculation for them, their mortgage payment, and let's consider once you talk about like renting out the complete property and staying in rental property for now, right? For 1 year or two, they actually get more rental income than their mortgage payment.
Right, and then what the theory behind this, guys, is that when you're cash flowing on the rental property, you're using that rental income to offset the rents that you're paying to whoever you're renting from.
Yeah, so this is very good because you also get the equity at the end of the year of the property. You need to understand that, right? Coming back to the Oakville, Kleinburg, Nobleton, if you know, King City, those are the one of the luxurious area in GTA. You won't find properties lesser than $1 million in this area. Even the townhouses in Oakville is over $1 million at this moment.
But remember, right, like Mayor, what we do again is when we do the real estate action plan, we're also dissecting the type of property they can buy.
Yes.
And the city that they can buy as
Definitely.
well. So they already know.
Yeah,
right, at
so
that
if
point.
they don't have, like if they have a work from home situation or a hybrid situation where they can move in the GTA easily with the 2 days going to the office, they can go to Kitchener-Waterloo or the Durham region, or probably staying in the Brampton area with the lesser property value, right? So these are the good properties you might be able to, even Hamilton is good area.
Yeah, Hamilton's growing the city of Hamilton is dumping $4+ billion into the city itself.
Yes, actually.
To revamp the whole city and, bring it up to a new level of the city of Toronto.
Definitely. They have a very good plan for the Hamilton city. They wanted to make another like a condominium city. So they are bringing LRT.
That's right.
They are bringing condominiums, exclusive plans, right? So there are multiple projects coming up. Also, they also redeveloping their rural properties area like Pembroke, Mount Hope,
Yes.
Dundas. Those are very good criteria for the first time home buyer right now.
Yeah.
They don't want to go to the Niagara Falls or the Valley. They can buy the same kind of property with the newer build in Mount Hall or Binbrook area.
Absolutely. Yeah.
So moving to the York region. York region is also considered as a luxurious property where you have the property value over 500 on a condominium basis. And if you go for a detached property, you will have to go for 1.3 million at least. So those are very luxurious area, but also those York will have one of the best schools if you're looking for kids friendly neighborhoods.
Yeah.
Durham region. This is one of the best area for the first time home buyer if they wanted to be in a freehold. Durham region is showing so much potential for the first time home buyer at this moment because they can afford a detached, semi-detached or townhouse in their merchant. Let's consider 500 to 600 thousand for the townhouses, 750 to semis, and 900 to 950 in detached. So they can actually buy a with the 10% on detached property in Durham region. And that's also kid friendly. So the Durham has maximum potential right now. We do a market analysis. When we do work with you, we totally do a micro market analysis, which it shows you where you're buying a property. Let's consider you're buying a property in a Brampton area or an Ajax or a Pickering area. We actually take a look at what sold, listed, and terminated property in that area, so you can have peace of mind when you are putting an offer on it. And you will love to have your own number because you already know what market is in that. So this is very good that when you do a micro market analysis after they do a recall, a real estate action plan.
Correct.
Now, moving to the real estate action plan. If you don't have any real estate goal, you want it to be a homeowner within next 1 year or so. What you're gonna do is you have to look up what is going in the market. You have to see what your affordability is, how much down payment you have, and how can you get 5% or 10% down payment and get qualified with the mortgage, right? So I'm gonna sit with you for 30 minutes. It's no obligation. You don't have to do any contract with me. It's just a free Zoom call, or you can meet me in person at my home or at my office. We can talk about what is the best next 3 months for you, because we're gonna give you the task like what would be the next step. Is it to meet Chris and get you a pre-approved, or to see what kind of property you can buy once the Chris tell us what is your actual budget should be. Not only that, you have to also see with the Chris that what is the monthly payment after mortgage, your utility and everything goes. We will talk all that in real estate action plan. That's a 30 minutes financial checkup call that we do it for all the buyers in this market because they need to know what they are capable of buying property. And definitely after that recall, we will definitely talk to the Chris and how you can qualify for the 5 and 10% down payment only as a first time home buyer.
Yeah. And when for everyone in the audience, when you do set up the call with Mihir, you want to be able to come to him with a budget. You know, understand all of your monthly expenses, your cell phone bill, your car payment, your student loan. Have that itemized ahead of time. So that way, you know, okay, after all of these expenses, the monthly payment that you can spend on the mortgage and your property taxes and your utilities is, call it $3,000 a month. So once we know what that number looks like and you come into my wheelhouse, then I'm going to be able to dissect it even further and say, okay, based on your budget, this is the type of property that you can qualify for. So it'll speed things up to get you to where you need to be.
So now, just 30-minute financial checkup call. Take a mobile, scan it. I have my calendar right there. You can book a call all the time in the next 7 days. Okay, there's no obligations. This is a very important call for you to understand how much I can afford in GTA market. Whether I have to wait for it or I have to go for right now scenario because you might be qualified and the prices are going up, or you may need to wait another year after the another interest rate reduction in 2025. We can give you all the steps, including from your mortgage to home inspection, or you wanted to put an offer after seeing the property. We will get all the plan in calendar for you. Now, coming back to my first incentives that I'm gonna tell you guys, if you book a call right now within next 6 minutes, and you can text me here, I just booked a call, I'll give you $100 Amazon cash voucher.
Amazing.
The second offer, that second incentive I wanted to give you is, as a first-time home buyer, there are multiple steps you may need to overlook sometimes, but we don't want to do that. Okay, we have to do a pre-approval, which is very important. Okay, you don't have to pay anything at all. I'll give you my word right now, being on call with the recording, that if you come with me and see me, tell me here, I wanted to buy a house in the next 6 months, I'll cover most of your costs. Don't worry. Okay?
It's a rich offer.
Rich offer? That's a good offer.
Yeah.
Okay. Now the next thing, I wanted to tell you this. Remember, I told you that you can buy a property without even real estate agent. So I'm gonna give you a tip right now. If you are looking for properties on a House Sigma or my agent locator that I have sent you, and you are looking properties on my applications, I wanted to share some tricks in that one. So first trick is how to buy a property with the best negotiation without real estate agent. So you have to take a look at the property, see how the history it behaves. So if the property is giving 3 times or 4 times terminated in the last 6 months, and it says seller is motivated, you have a best chance to negotiate with that particular person and have the property below market. And on that tip, I wanted to talk about just as a mortgage perspective. If I buy a property below market value, and appraisal comes around 20,000 more than I purchased, is it possible that bank can give me that 20,000 line of credit or a flex line that I can use it to remodel or make another adjustment in the property?
So the way it works is it's applicable to pre-construction.
Okay.
So if you bought the property for 600,000 and it's gone up in value, you can now borrow up to 75% of the new value, as long as it doesn't exceed the purchase price.
Okay.
And then you can get that money back for closing costs, remaining of the down deposits, legal fees. And if you have HST for buying as a rental property, all that money kind of comes back to you on closing. A lenders don't have an appetite. Every bank has their own appetite. Yeah, even with the lines of credits I was mentioning to you earlier, like if the bank has, if you have a line of credit, some banks take the payment on the limit of the line of credit. Other banks will take payments on the balance of the line of credit. That's important to know because that's determines which institution you go to. Yeah. Right, because that one's going to qualify and the other's not. So on a new pre-construction, once it's built, there's alternative lenders, B lenders is what we call them. Alternative on the alternative side, they're the ones that will allow you to borrow up to the new value.
See, this is a very important thing. So you need to understand why you need to buy property below market instead of buying at a higher value in the next 6 months when the market is going up. You have more potential in the next property here, right now. As a first-time home buyer, you need to understand that either you wanted to be a real estate champion, like people who owns multiple properties. Yes, you have to think that way, because if you don't, it's your job to get financial freedom. It's not any other's job. It's your job to make sure your family is fed very well and you have more money in your pocket at the end of the 3 years or 5 years. So this will help you to buy your dream home, even if it's not your first home, but it can be a second home as well. Awesome. So we are all over 30 minutes. If you have any question right now, go ahead. We will wait for 5 minutes. Guys, you need to understand, you need to book this brief call with us and you get started. At least you get to know where you stand. If you are thinking in next 6 months or 7 months, how I'm gonna buy a property, You need to start today because it takes at least 6 months to buy a property because you have 3 months of waiting once you put an offer because 90 days is a closing date. On in general, if you are buying a condo apartments, that might be a little bit less, 30 days to 65 days. But yeah, if you're buying a detached property or freehold properties, more likely 90 days will be required. So need to understand, if you're thinking I want to buy tomorrow, or maybe I need to buy in 1 month, you are already late. If you have to buy within the next 6 months, you have to start today. So get on a call, take a picture, take a scan, and get on the calendar right now and get the best incentives that I just offered right now. If you have any questions, let us know in the chat box. What do you say, Chris? Market will be going down or it's gonna go up?
I think it's gonna stay the way it is for a little bit till the end of the year. And I think we'll end up, where the market will slowly, gradually increase over into next year.
And next year. Thank you very much, guys. We are all over 30 minutes. I did not expect to go over 30 minutes. And we do not have more capacity right now. We both are tired.
Yeah.
I wanted to share, it was amazing experience with the Chris.
Great.
And I really love working with you and the way you handle the clients is absolutely amazing.
Appreciate you. Thank you so kindly. I appreciate that. And thanks for having me on.
No problem, no problem. So guys, if you wanted to work with just on a mortgage, how much qualified, you can talk to me and I can give you number for the no problem at all. We will give you all the time, paying, all the information that you need. You don't need to buy a property. You just need to get information, right?
On how to buy stuff.
Definitely.
Absolutely. And we're here, guys. Anytime you need us, like you said, please scan the barcode or please give me a call and we'll be happy to speak with you.
Thank you very much. I appreciate you being on the call. I really like the way you are expressing yourself being on the call because I know it's very hard to be on a Zoom call today because we have been in COVID so long, we got so stuck to the Zoom calls.
Yes.
I would really like to meet in person, so book the appointments, meet me in person. Really, see you next time.
Take care, guys.
Bye.